This is a stock market review for July 10th, 2020. We're going to be looking at my watch list of 115 stocks that I have been going over every single morning since 2015 November. And I've been waking up and doing this every day that the market was open. So I've accumulated quite a bit of knowledge, and it's very unique to my watch list. And there's a lot of blue chip stocks, which are companies that have existed for a long time and have been showing consistent returns for decades, as well as newer companies, as well as growth stocks. And one of those stocks returned in my portfolio over 1,600% in the last 90 days. That is 20-fold returns. So a $50,000 investment would have turned into $1 million within 3 months. Again, these are rare opportunities, but they do exist all the time in the stock market. And what I mean by rare and exist all the time, I know that sounds like an oxymoron, but they're always there. It's just rare to find them. So by watching my video, you might find a potential stock that can be going up 1,600%. Who knows? But also, I always advocate for investing in index funds every single month, no matter what, if you can. And with apps like Charles Schwab, you can definitely be purchasing those index funds for whatever amount of money you can afford, as little as $10 a month. Just think of your investments as a subscription to your future. Okay, without further ado, here is my review of the July 10th stock market. I also had a lot of spit in this video. I'm sorry I did not edit it out because I wanted to get this video out as soon as possible. So subscribe, welcome to my channel where we grow our wealth growth mindset. Okay, with that, I will see you later. Don't forget to drop a like. Let's take a look at today's stock updates. I am extremely excited, believe it or not, even though my voice is kind of tired. Already there was a lot of volatility in today's market. We can see the red right there at the top, S&P going from green to red, Dow Jones, NASDAQ having a tough time but just climbed out at that 0.01. Again, Russell 2000's more diversity than the Dow, which is just 30 companies, or the S&P, which is 500 companies. I know that spit was nasty, sorry. Crude oil going up today. Gold extremely volatile today. I'm gonna click that and check that out real quick. We had an up of 0.6ish, almost 0.7% today. Okay, bonds, interesting. I mean, bonds, people typically think of bonds as a very stable thing, but look at that. That looks like stocks to me. Okay, that looks like heck of stocks. Let's check out the max history. Okay, not doing well with the max history. This is why I tell all my friends, look, if you're in your 20s, even in your 30s, and maybe even early 40s, I would stay away from bonds. Bonds are really just to make you feel better when the market does crash. Your portfolio doesn't go down as much, and it gives you an opportunity to rebalance. But honestly, if you just do nothing, most times you'll win. Ooh, NASDAQ, 0. I need it. Yes. I collect rare screenshots of stocks, and this is my first captured green 0%. Usually it is red. But wow, you saw it switch right there. Okay, anyways, let's move on to individual stocks that I've been tracking. Denny's, of course, is having a lot of trouble lately. I mean, you don't have to be an expert to say why. These big jolts right here, lots of day trading, people switching it up, getting 1% returns, which is huge because for the average long-term investor, you're only trying to get 10% in a year, and you're even happy with 8%. So a lot of opportunities if you were to, buy here, sell here, buy back here, that's already 2/10 of what you need, or 1/5. Let's reduce that. But Denny's, again, if it recovers, there's definitely a lot of opportunity. But that right there, let's get closer look at that drop. That is a nasty Six Flags type drop. I shouldn't say Six Flags are closed right now too. So, I mean, that's a double entendre right there, because Disney and all of them are not doing too well, even though Disney stock has recovered quite a bit. Let's take a look further. Mohawk Industries is something that I was really interested in this morning, because yesterday they had a 20% drop in a single day due to a lawsuit that took a, I would say, negative turn, but it started all the way in January, and you can definitely read more up on that in these articles over here. I really like the Motley Fool ones, why shares of Mohawk Industries are falling today. They're usually 15-second reads, and maybe we'll check one out later for a different company. Let's scroll down a little further. AMC is something I think is really cool for just swinging, because there's definitely a lot of, as you can see, jumps and drops, jumps and drops. So lots of day opportunities for day traders to make their like 3 to 4% there. But again, extremely dangerous. We don't know what's gonna really happen with the theater industry. And I believe that it was confirmed, don't quote me on this, that Amazon is teaming up with AMC. That may be just a rumor, but sometimes you can get rumors solved by going into the conversations and people talk about it. Turns out the talk of a bankruptcy is to negotiate loans. So, okay, sometimes there's a lot of gossip in here, and it gets pretty not productive, but there's sometimes really great information in here. Okay. Oh my gosh! So we have Carnival Corporation over here up 9.5%. I definitely want to see news, and if there's no news, it means it's just being flipped. That's all that's usually happening. Sometimes there are other reasons. There's no news, but sometimes these folks who are following closely know a lot more than I do. So let's take a look at these conversations on what is going on. Media went hard on Robinhood regarding pumping stocks and airlines. Okay. Billionaires who went there bashing. Okay. Yeah, so it looks like this is some conspiracy theories. A lot of new traders are buying things like Netflix, Tesla, and so on, and billionaires are looking at the numbers and are saying, hey, actually, you guys should be losing money because these companies are not that profitable. Okay, there's a conference call today, so that's news. That's probably what people are expecting. Let's go a little bit further. And on that Robinhood topic, yeah, a lot of people new to investing go to the Robinhood app and they do options trading, not really knowing that it's a form of gambling rather than investing. Investing is when you buy something and you hold it for a very, very long time. By the way, Yahoo Finances, you can toggle these by clicking them and you can see the dollar changes. But we are definitely more interested in percent changes because, like I said, the typical investor, the long-term investor who takes as little risk as possible for the most amount of gain, they are happy. Oh, it just went up to 10%. They are happy with 10% returns annually. This is one day. Don't forget that you will have to pay short-term capital gains taxes, so about a third of these returns will be gone if you sell it under a year of holding. Okay, let's look down a little further if we see anything interesting. Sometimes I skip a lot of stocks. I do hope to make these types of videos and you find them educative, or is that even a word? Educational. It's still early for me. Okay, it's not early, it's like 9, but whatever. Don't judge me. If you find these videos helpful, definitely like and subscribe. There will be more of this type of content if you enjoy it. Charles Schwab is something that I trade on, especially with my stimulus check. You could check out that video. I should update it. There's been a lot of amazing changes, including one stock being up over 1,600%, and maybe we will talk about that one later. 1,600% is a 20-fold increase in about 90 days. That's unheard of. I'm just as shocked. I did not expect those kinds of returns, but we can talk about why they happened a little bit later, or you could check out that video. It's the Charles Schwab video. Maybe I'll have the little pop-up happening. But Charles Schwab, the actual company, I bought some shares on the 24th. I buy stocks every 24th. That's my grandma's birthday, and I kind of honor what she started. She was always the frugal one in the family who always had money saved up, but she didn't know about investing. She didn't really trust the markets, and she comes from the Soviet Union where all of that, of course, was not really a thing. So she was very suspicious. But I took what she did, which was save money, and added the next ingredient for wealth building, which is investing money. And we see Charles Schwab took a hit with the March crash. And later on, it started doing a little bit better over here, almost returning back to March prices. However, not quite all the way, and it went down even more. So I did purchase them on that dip right there. Actually, I just crawled out of the red the day I bought them. The very next day, they went down 5%, which is, again, half of what you want to get in a year. But again, that's the risk of having individual stocks. If you don't want individual stocks, definitely buy index funds. And for the majority of my investments, I am buying ETFs. Speaking of ETFs, here's a high dividend ETF right here, SPYD. It tracks the S&P, but it also focuses more on the dividend paying stocks. As we can see, let's take a look. Maybe it'll show us. I think there's a little glitch happening. A lot of unknown information right now. Okay, but let's check that 5-year history. Again, there's that dip. It kind of took out a lot of the gains. But because this is a dividend-paying stock, a dividend-paying ETF, usually you care less about that capital growth and more about getting income or dividend money to reinvest throughout the year. I know I'm swallowing a lot of spit. I'm sorry, that's so gross. Don't thumbs down this because of that. Match.com, they're doing some sort of shenanigans right now, like buying and selling like pieces of their own company. I think they're merging. As you could tell, I got my words jumbled up there for a second. But there was a huge dip with them. Whoa, 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 whoa. What's going on here? This is not a thing. That was weird. That was very weird. This did not happen. It was... Oh, you know what? No, I don't know what this is about. I think this is like some sort of maybe share split or something like that. If we go into the 6-month version, you don't see that. So that's probably a share split where a company just splits up how many shares they have. I really don't know. That might be a glitch. Sometimes you do get weird little glitches here and there, but share splits is when, like, say, a company like Apple, all of a sudden their stock cost $1,000 and they're like, you know what, we need some new investors, and they give you 10 shares that are 100 each instead of one share that's 1,000, and you get a lot of new investors when that happens, but nothing fundamentally changes in a company, and that's probably going to happen a lot less with partial shares and on Charles Schwab, on Robinhood, on where else? SoFi, and a couple other places, Fidelity. You can buy partial shares like that, pieces of companies. So will there be more stock splits in the future? I'm not sure. Farfetched had a lot of ups and downs, and recently they've been on a huge high, going up almost 20% in a day, 2 days in a row. But today is that correction for them. Nothing probably happened. Yeah, nothing really happened. They announced that they are going to beat all of the estimates on their report for their earnings, and that should be fascinating to see, considering Farfetch is a company that ships worldwide, and companies that ship worldwide are having, I don't know, some issues. But actually, I want to backtrack on that. Actually, companies that are shipping are doing that more. Sorry. Yeah, companies that are shipping worldwide are actually doing better, but some places were limiting, and Farfetched in the beginning had a lot of concerns. Will they be able to keep shipping. We don't know if the rules were going to change, and we can see their share price almost halved at that point. And if you had bought them near the bottom or somewhere around there, you would have tripled your money. Moving on, Planet Fitness has been going down a lot recently. A lot of flips. There it is. There's the volatility, but like I said, it's been dropping pretty hard. So that's definitely something to watch if you want to do a quick flip. Cryptocurrency has been really stable recently, so I'll pass that story for now. Beyond Meat, really interesting. So Beyond Meat, they had some trials with McDonald's in Canada. Those trials got halted. So they crashed pretty hard right after those trials got halted. But we know that Beyond Meat is becoming almost a staple part of the American, if not world, diets. Let's see what people are saying in the conversations. Plant boot. Okay, any good news will be very good news. So we see people are just waiting for something positive because they know a bunch of people are going to be going in, especially considering that Beyond Meat is going to be pumped up because of all of these drops. So if you're trying to do a quick flip, Beyond Meat might be a good choice just based on the last month's numbers. But we can see like further on during that crash, they really took it hard, about 50% loss while the market went down 30%. And they healed pretty quickly, way more than they were before the crash. But we remember their story. They used to be at these prices a while ago, peaking at $230. And that's the dangerous part about IPOs or initial public offerings. You might have huge returns, but you can't do anything about it. Your money is locked in for a predetermined amount of time when you're buying a company that's freshly out and you're making that commitment there. And besides, when you're investing, you definitely don't want 3 months to make a difference in your 10-year plan, right? Okay. Let's see what else is happening. Etsy's been doing. Roku is on fire. Gosh, so many times I wish I bought Roku stock, but I don't know enough about Roku. I do know that, hey, we're living in an age where there's Disney Plus, there's Amazon Prime, there's Hulu, there's Netflix. What do all those people use? Roku. So Roku is that Rockefeller thing. It's also, you know what, Rockefeller's not the example. The example is actually gold miners. It's the people that sold the pickaxes that profited more than people who actually mined gold 8 hours, 12 hours, 14, 16 hours a day. So this is the pickaxe. That's the crash again. Again, if you're buying in that crash, that's a lot of opportunities. Don't wait for crashes. Most people who wait for crashes end up losing more money. Okay, that's definitely not a cool thing to do. It's Peter Lynch, founder of Merrill Lynch, who says more money is lost waiting for corrections than during corrections. So don't wait for crashes to start investing. The best time is now. And can you even tell that a crash happened? Like, where was that great crash of 2020? Was it here? I don't know. Was it? No, that's 2019. It was not that. Was it here? Yeah, that's actually it. And it did not really matter. It might matter later where we get the second wave and the numbers from there. But as of now, we don't see a lot of drama there. And Roku's growth may be correlated with Netflix's, which we'll get to in a couple minutes. We see SPY. This is the investment that I was buying monthly. I used to buy one share every month, no matter what. And then I switched to VOO, which is the same thing with a cheaper expense ratio. And if you want to know how expense ratios work, definitely check out my expense ratio video. That can cost you a lot of money over a 40-year period. If you're investing for the long term, expense ratios can eat your profits, but if you're judging your investments just on the expense ratio alone, you might avoid a higher expense ratio and you'll miss out on a lot of profits, because a high expense ratio does mean that it is being managed, and sometimes it's managed very well, or there's lucky breaks. and you see ETFs that have higher expense ratios outperforming the market consistently for a very long time. So it may be worth it to pay more. But definitely check out that video, and there's numbers on there. This is something that if you're new to investing, you should buy monthly. I would definitely recommend that. Again, not official advice or anything like that. I'm not a financial advisor, just someone who's passionate and has been waking up every morning just like this, except instead of talking to you, I was talking to myself. But as you can see, the market does tend to go up, and these are the ways where people say, oh, the world is ending, it's all over, 9/11 happened, I don't know what we're going to do. Oh, we recovered. I guess it wasn't that bad. Oh, wow. There's that housing crash. Oh, how will we ever get back to where we were? Oh, like that. You know. So, definitely investing in the long run. And remember, even if we're at a down point, we're still getting paid out dividends, right? This ETF pays out 1.85% dividend if you buy it for this price right now. Okay, let's move on, and we're about to wrap up quite soon. We're getting to the bottom of my list, and I know I skipped quite a few stocks. I don't talk about every stock every day, but we eventually will get to everything. So Skechers is something that I gambled a couple $100 on. I say gambled because it is a blue chip. It's been around for quite a while, doing its thing, but over here we can see that in the last month it has not been doing too hot. I bought it 2 months ago, so I should still be in the green, but just full disclosure, I do own a couple shares of Skechers, and sometimes I do that. If I have like $100 left over, I will buy some cheaper stocks because Merrill Edge, where I invest, does not allow for partial shares. If you're using Charles Schwab, definitely you can invest in whatever you want and break it down into $10 increments. Okay, we're getting to the most interesting stocks for me. Personally, Twitter just had a huge spike the other day, by the way, because there's rumors that TikTok might be having some lawsuits. So when that happens, all these other companies start to go up, including Snapchat and Twitter, possibly Facebook. I'm not sure if Facebook had a price hike yesterday. I don't remember. And oh my gosh! My bed squeaked. Yes, I'm doing this for my bed. Overstock. If you've been following me for a while, you know that this is something that I talk about a lot. This is something that I invested in, and I was actually in the red. I invested 2 years ago, and I basically invested right here. So I bought on the way down. I bought here. I bought here. I bought here. And I even bought, well, it doesn't even show it, but I bought at the lowest point here, which was $2.53. I got in at about $2.67. So that is more than 20 times return. And the sad part is I only bought 3 shares at the $2 point. Yeah, I know, it's very sad. I could have retired probably years earlier, if not now. If I invested all my money in Overstock, I would be a millionaire in 3 months. So there are these rare opportunities that do happen. Again, it could be a pump and dump, but there is a lot of new areas to this company, a lot of fundamental changes, and because of these fundamental changes, that's actually why the stock even went down this low. Of course, with the crash of March, that had to do with it. The CEO left and was involved in some conspiracy theories with the FBI. Gosh, all my saliva, all my saliva. Welcome to Funancialism, where we spit over stocks. I'm just amazed by how this keeps just going up and up and up. But as we can see here, it's had a few of these. So is this a stock that you want to hold on forever? Possibly, because the company changed so much. They have a brokerage. They have where you can invest in both stocks and Bitcoin and cryptocurrency. They are obviously known for their retail, which is furniture and rugs and everything that's home decor. what else do they do? Again, yeah, it says it's overvalued, but you can't always trust these Yahoo Finance ones. Again, they're also opinions. It shows you support, it shows you resistance, where a lot of people created stop losses right here at $36, which means it's very hard to go less than $36 in a quick time. Resistance at 46, it means people are probably going to be buying it up, especially day traders at that price. So it's been doing pretty well. You can definitely do a little bit of speculation, especially based on news. Like I remember when I was starting out, Netflix was going to China, and sorry, Netflix was going to India, and that definitely made a big spike in Netflix, and the results have rippled out to today's $500 price of Netflix. If that's still true, we'll find out in a minute. It was one of the first stocks that I followed. And we see some airlines going up. I don't think Boeing was up this high. That's something that I would scroll back to if I wasn't just going in one direction. Shout out to Harry Styles. His album's pretty cool. We see, what else? Target, okay. There's Comcast. Like I said, Snapchat was very high. It went up times 5 in the last year, right? Let me just show you that year. Where was it? Oh, wow, it's been a longer time than that. Well, okay, so 7, and then not quite times 5. But I remember in probably 18 months ago then, there it is. 18 months ago, it was at $5, and I can't believe those half a year passed. Wow, I didn't notice that. When was that? November 30th. Whoa. Wow. Okay. So a lot of time passed. There's Amazon doing its thing. Again, my mom and I just sold some shares of Amazon a while back and we missed out this huge rally, but we kept some shares. What else? Almost done here. This is the final rally. Facebook down today. Interesting. There it is. The news of the day. Netflix in the 500s. Wow. 5 years ago, I was actually I held Netflix at, I've seen it go into the 80s. Where was it? It definitely touched the 80s at some point. There it is. It says 79 is the bottom in the last 5 years. So imagine buying it there. But of course, you probably wouldn't get that opportunity. And there was so many times where it reached the 400s or very close to it and collapsed. Reached the 400 and collapsed. And finally, boom, amazing growth. Definitely, I think the crash of March played a role there when people realized that, hey, this is something that people are going to be using and its business should not be affected too much. And there it goes. That's the realization right there. Hold on, wait a second. Why are we going down? We don't have to be going down. We should be going up. Everyone's going to be using us. And you could definitely read articles, how many new accounts were made. Tesla, unbelievable, but nothing compared to Overstock. The Walt Disney Company, I don't know why it's going up, but the reopening should be happening quite soon. Let's see if there's any news on that. Disney World Combination pent-up demand. So I know Disney World is a lot closer to open because Florida, but I'm not sure about California where I'm at. I know people really miss that. But again, a diversified company. They do have Disney Plus, and that is protecting them from total devastation. So that's how a company can be diversified as well. And some clickbait articles from the Motley Fool. Okay, Apple, Restoration Hardware, that's it. Let's check out the biggest winners right here. These are the most active, so people are flipping them. We can see Carnival Corporation went from 10% to 9%. Again, 1%, that's 1/10 of what you want in your year. Of course, capital gains taxes, if for short term. These are the top gainers of the day. I don't know any of these companies. Top losers of the day. Alibaba Health information. Interesting. The bonds. currencies, and so on and so forth. Alright, thank you so much. I will upload this. Why am I telling you this? Obviously, it's already uploaded. If you've seen this, don't forget to like, comment, and subscribe if you found this useful.